This is Alpha. Let's continue our conversation from last time. Who will be the final winner in the Sino-US tariff war, and the possibility of further reconciliation between the two sides? China can be said to have won a small victory in this round after Trump exempted some electronic products exported from China to the United States from high tariffs. Rather than saying that China was one step ahead, it is better to say that Trump played the tariffs too exaggerated and finally had to swallow his words. Why is it that the United States showed weakness first, while China can remain calm? This question is actually very simple. It doesn't mean that whoever started the problem should be the one to clean up the mess. The real reason is that the tariff war is a double-edged sword. It hurts the Chinese people as well as the American people. What the American people want is the American dream of having enough food and clothing. This dream is not entirely a spiritual dream. However, when we look back at Chinese history, we find that the Chinese people are different. They are not only enthusiastic about the Chinese dream of great rejuvenation, but also have super strong fighting power and long-term endurance even in their dreams. In this sense, China is invincible. So Trump's use of a double-edged sword to attack China is nothing but unilateral self-mutilation. When Trump uses this trick, he is doomed to fail. So now that things have come to this, will China and the United States drift apart, or will they further reconcile? Let's first analyze the US's own policy weaknesses. China has shown a decisive and tough attitude in this trade war, quickly responding with a retaliatory tariff of 125% and imposing restrictions on American companies. This reflects that China has long seen clearly the weaknesses of the United States. The following weaknesses are what Trump cannot ignore. First, supply chain dependence. The United States is highly dependent on Chinese-made electronics, such as smartphones and laptops. China-made products account for 80% to 95% of the U.S. imports of such goods. In the short term, the U.S. will not be able to localize or transfer its supply chain. Countries like Vietnam and India lack the infrastructure and scale of production capacity of China. If high tariffs continue, it may cause a surge in costs for American companies and higher prices for consumers, triggering both economic and political pressures. As an elected government with term limits, it is impossible to turn a blind eye to public opinion. Second, domestic political pressure. Trump's tariff policy needs to balance voters' interests. High tariffs will inevitably lead to high inflation. The average U.S. household is expected to incur additional costs of $1,300 per year. This will seriously damage Trump's base and lead to a decline in public support. Especially in 2026, Congress will hold midterm elections for both the Senate and the House of Representatives. Trump certainly does not want to turn the last 2 years of his presidency into a waste of time. The third point is market sensitivity. The U.S. financial markets reacted sharply to the tariffs, raising concerns among global investors about the safety of U.S. Treasury bonds. Bond yields surge as dollar weakens. Under market pressure, Trump suspended reciprocal tariffs on other countries and exempted some electronic products from high tariffs. This shows that Trump's policies are subject to changes in the capital market. Fourth point, insufficient coordination among allies. Trump's America First policy has a global impact, even alienating close allies and old friends like Canada and the European Union. This makes it difficult to form a united front to isolate China. The EU and China have begun discussing how to strengthen trade ties to weaken the effects of U.S. tariffs. Although the possibility of China and the EU truly uniting is extremely small. But these actions may make Trump treat the EU better. Fifth, U.S. companies in China lobby the Trump administration. Big companies like Apple, Nvidia, Dell, and HP have huge investments and strong production capacity in China. If such high tariffs are imposed on China, these companies will immediately be in trouble and will also cause severe fluctuations in financial markets. There is no doubt that this will destroy the business of Wall Street bosses. From China's perspective, we not only see the weaknesses of the United States, but also have the confidence to respond strongly. The first point is that the Chinese economy has become more resilient. China's official statement, China's export dependence on the United States is declining year by year. China's exports to the United States accounted for 12.8% of total exports in 2023, down from 19.8% in 2018. Although there are reasons for re-export trade, this is also a way for China to resist the U.S. tariff blockade. China reduces risks by expanding domestic demand and diversifying markets. Although the economy faces challenges from the real estate downturn, the government still has some fiscal space to stimulate consumption to counter the impact of the trade war. Second, China also has a variety of retaliation tools. China could not only impose tariffs but also restrict rare earth exports and sanction U.S. companies, potentially tightening the supply of key materials. These measures directly target the U.S. high-tech and defense sectors, which can amplify the effect of counterattack. Third, China believes that the United States cannot afford the damage caused by a long-term trade war. There is a high degree of dependence on low-priced products from China because of the U.S. consumer market, and the profit margins of U.S. companies in China are more threatened by high tariffs. China's official media propaganda, America is a declining empire. Such propaganda strengthens domestic public support and consolidates Beijing's tough stance. Fourth, the Chinese government has a deep understanding of the Chinese people's endurance of suffering. Rather than calling this a challenge, it is an opportunity to rally the patriotic enthusiasm of the entire nation. China has accumulated bargaining chips through a tough response to avoid being seen as a sign of weakness by the public. The Ministry of Commerce's statement said it would never accept bullying and would rather suffer economic losses than compromise. This would help it gain the initiative in future negotiations. Understanding the tariff war from China's perspective can be described as knowing both ourselves and the enemy, and winning is in our grasp. However, it also allows the United States to see clearly where the crux of its own problems lies. Later, the United States will intensively restructure its supply chain. If things evolve in this direction, will China be able to maintain its supply chain and export advantages in the future? We assume that the United States continues along its current course. Let's analyze the changes that may occur in China in two stages: short term, 1 to 3 years, and medium to long term, 3 to 10 years. China's supply chain and export advantages remain resilient in the short term due to constraints such as technical talent and hardware facilities. First, infrastructure and scale. China has the most complete manufacturing ecosystem in the world, including ports, logistics, good and cheap labor and parts network. Although countries such as Vietnam and India can also attract investment, their scale and efficiency are far behind China at present. For example, Vietnam's exports of electronic products in 2023 will be only 1/10 of China's. Second, technology and production capacity. China's production capacity in the fields of smartphones, displays, and semiconductor equipment is unlikely to be replaced in the short term. 75% of Apple's supply chain is still concentrated in China, and the shift of the supply chain is estimated to take several years. Third, cost competitiveness. Even if tariffs are imposed, as long as they are within a certain range, Chinese companies can still maintain their export competitiveness through price cuts, moderate depreciation of the RMB, and government subsidies. Fourth, a diversified market. Chinese official data show that the growth of China's exports to ASEAN, the EU, Africa and other markets offset the decline in exports to the United States to a certain extent. In 2023, ASEAN accounted for 15.4% of China's exports, a figure that exceeds China's direct exports to the United States. After multiple re-exports, it is still cost competitive. One cannot help but marvel at the low manufacturing costs in China. But in the medium and long term, China's manufacturing industry faces huge challenges. The first reason is the acceleration of supply chain transfer. American companies have already built factories in Vietnam, India and Mexico. For example, Apple plans to transfer 20% of its iPhone production capacity to India by 2028, and this process will be further accelerated. Other countries, such as Thailand and Malaysia, are also attracting investments in semiconductor and electronic component assembly. The second reason is the impact of technological blockade. U.S. restrictions on chip and equipment exports to China will weaken China's high-end manufacturing capabilities. Although China has made some progress in the research and development of AI chips and lithography machines, the gap with the United States and Japan is still large. The third reason is the increase in costs. The cost of labor and the price of raw materials in China have risen by 2% to 5% since 2018. The profitability of low-end manufacturing has been declining year by year, forcing these companies to consider relocation. The fourth reason is geopolitical risk. The trade war and the trend towards de-risking may force many companies to exclude China from their supply chains. The EU and Japan are also strengthening their scrutiny of investments in China and guarding against the impact of cheap Chinese goods on their markets. Through the above analysis, we can know. In the medium and long term, China's economic prospects are worrying. However, China's supply chain advantage is difficult to shake in the short term because its scale, technology, and cost are unmatched. Just like the high tariffs on some electronic products that have just been exempted by the Trump administration. In the short term, Chinese manufacturing has significant advantages that cannot be replaced, which forces the United States to bow its head temporarily. Although the United States is temporarily at a disadvantage in this round of confrontation. Will China take this opportunity to make concessions and move towards comprehensive peace talks? From China's perspective, the attitude is very tough. China rejects humiliating compromise and insists on fighting to the end. The recent victory in exempting high tariffs on electronic products has made Beijing more confident that it can only win by fighting to the end, and it is waiting for Trump to further take the initiative to retreat. Moreover, these electronic products account for about 20% of China's exports to the United States, which can greatly alleviate the temporary export pressure of such products. At this time, Beijing has no reason to take the initiative to make goodwill or make major compromises with the United States. Waiting for the opportunity is the most comfortable way for Beijing to deal with it now. As for the United States, Trump needs to fulfill his campaign promises and maintain high pressure on China to gain domestic support. But imposing higher tariffs on China would lead to soaring inflation expectations, a rapidly falling treasury market, and widespread dissatisfaction on Wall Street. Therefore, Trump took the initiative to withdraw some policies and adjust the pace of policies in exchange for a relatively mild policy environment. At this time, Trump has suspended the reciprocal tariff policy on other countries and is negotiating intensively with them to try to form a trade alliance against China. If Trump makes concessions to China again at this time, there will be no more objects to fight in this tariff war. This will make Trump's previous tariff efforts go to zero and make this massive action to reshape the global economic landscape a joke. So I think that until Trump cancels the high tariffs on some electronic products from China, there is no greater urgency and room for compromise between China and the United States. There is no basis for a comprehensive easing of the Sino-US tariff war. But in the short term, the two sides may make limited compromises or partial negotiations. After the above analysis, I think, in the short term, the current tariff framework will not undergo any qualitative changes. As the situation develops, if there is economic pressure in the United States, for example, inflation and unemployment rise, the economy falls into recession. At this time, China's economy has also slowed down significantly, and major social risks may arise. Only then will both sides be forced to seek further easing of relations. This conclusion can be described in investment language. In the short term, the benefits of Sino-US trade relations have been exhausted, unless there are extremely difficult or unforeseen major events. The situation of continuous confrontation and partial easing between China and the United States will continue, and the supply chain will quietly change in the established direction. Okay, let's stop here for now. Thank you for your company. Personal perspective, for reference only. The level is limited, please think critically.